Welcome back to another episode of Freedom Finance with Lanny, guys. And I'm here to admit, not every stock move I've made has been a winner. No. In fact, I've had quite a few losers in my portfolio. In fact, I've got my top 5 worst performing stocks that we're here to talk about. And they're not a couple $100 losses here and there, but I'm sitting on almost $10,000 of unrealized losses from these 5 stocks. And I just wanted to kind of admit that to you guys and show you the transparency of my portfolio. But really the driving point is not just what I could learn from these 5 stocks, but what you can learn as well through the mistakes that I may have made. So guys, grab your tissues, some tears might be shed on this one, or grab your coffee, grab your beer, because we're about to look at the 5 worst performing stocks in my portfolio. Let's get it. Alright guys, if you haven't followed me yet or you haven't caught my other videos, I actually talked about my top 5 best performing stocks. So this one is going to be the complete opposite of that video here. And guys, I've been investing for, close to 15 years now. In a couple months I'll hit the 15-year mark. Obviously, I've learned a lot over that time frame, this journey, this personal finance journey. And you guys know it by now that I am a dividend stock, dividend growth investor. Check out all my videos related to that. You've probably known me from the Dividend Diplomats as well with my boy Bert. Much love to Bert. Don't worry, we're still putting content over there. But I really wanted to, put this out on this channel, on my channel, to talk about my 5 worst stocks here, guys. And let's show up, the first stock here on the screen. Oh man. Yeah, this stock. Paramount Global has been my worst performing stock by far since I've owned this stock. What started out actually as an initial investment into Viacom, and then Viacom CBS came together and merged with Paramount, and now they're called Paras. Their ticker symbols PARA. And over the time frame, guys, yeah, you see it. The numbers don't lie. I've put in almost $5,500 into Para stock over the last few years. Really nothing much, probably over the last year plus. And, it's now worth only $2,225. So I'm looking at a 59% loss, or a $3,200 paper loss right now. Haven't sold it yet, obviously. They just had a dividend cut, which obviously for dividend growth investors, those always sting. And, every few years you end up with a couple of dividend cuts. This year was between them and Intel. But yeah, what can we learn from this stock investment? Well, they didn't have a long dividend history prior to merging and forming Para. So, definitely look at the longevity to the dividend. Just because the current metrics might look right, the current payout ratio might look great, if they don't have that 10, 15, 20, 25 year plus dividend, not just payment streak, but look at the dividend growth streak. If they don't have that, really take that into consideration. And then I should have known that with the streaming wars and everybody getting off of cable, that it was going to be a high cost to still compete in that industry. And that's essentially what Paramount is in right now, with the likes of Netflix, Disney Plus, Apple, Peacock, you name it, all of Hulu, all of the streaming providers cost big bucks. And it's costing me big bucks for, holding on to Paramount stock right now. So that is the worst performing stock. But let's keep moving down the list, because guys, all of these I am down at least $1,000 plus. So let's get into the next one. Grab your tissue, guys. Oh man, had to hit me with this one. I call them Big Red because that's currently what it looks like in my dividend stock portfolio. Nice red. Verizon, ticker symbol is VZ, guys. And I've owned this company for years. And in fact, I've got a family member that actually works within their sales department. Does very well there. Seems like a great company to work for, obviously, but maybe not the greatest stock to own in your portfolio. And I had an investment of, over almost $6,500, $6,500 into this dividend stock. And, they actually grew their dividend this year. So the dividend streak is still alive. So that hasn't stopped yet. They still pay a nice, handsome dividend. In fact, the dividend yield now is over 8.5. It's actually at over 8.6% right now at Verizon. But my $6.5 thousand rounded investment is actually worth only about $4.3 thousand. So, I'm looking at a nice $2,200 unrealized loss right now. This is on top of the $3,200 unrealized loss from Paramount. So just from the two companies alone right there, that is $5,500 that I am in the red there, guys. So I am down 34% on Verizon. Luckily, those dividends are going to be really making up a lot of ground this year and more than likely into next year. But what is my takeaway from Verizon? What can I learn from owning Verizon stock? Well, let's boil it down. First was the 5G auction. T-Mobile, AT&T, and Verizon all paid a pretty penny to launch their 5G service. This means they had to take a lot of debt to enter into, that service. And let's just, get the elephant out of the room. Interest rates aren't particularly low right now, right? In fact, we're at a record pace of record increases to the Fed funds rate. Thanks to Papa Powell, that increases the borrowing rate. So the telecom industry, heavy on debt, heavy reliance on those borrowing streams, and that just means higher cost to Verizon. In addition, not only is it expensive, but it's pretty easy for their customers to switch. How many of you watching this have switched from Verizon to AT&T, AT&T back to Verizon, Verizon to T-Mobile, T-Mobile to Verizon, et cetera, et cetera? So it's very easy to switch. It's like the old snip, snap from The Office, Michael Scott style. Or have even left the big three in general and have gone to Google FI, which is what I use. Link below is in the description. You could save a bunch of money by moving to Google FI. No, this is not sponsored by them, but I pay about $25 a month for my phone service. So Verizon, it's easy to switch, easy to leave as a customer. And then lastly, the lead cable incident right now, which they're assuming might cost billions, but it's probably not going to get solved right now. And that's with all the lead cables in the ground that AT&T, Verizon, and other companies are currently a part of right there. So just a few lessons there. Look at the debt. But, Verizon still has a sustainable cash flow to service the debt and the dividend right now. Down 34% for Big Red, currently holding this stock. All right, let's get into the third stock that is a loser in my portfolio right now, guys. Let's flash it up there on the screen. 3M. No, I'm not talking about the candy M&Ms. We're talking about 3M Company. Ticker symbol is MMM. And man, this company is down by quite a bit this year. Obviously, everybody's probably aware of the earplug lawsuit that they actually just settled earlier this year. That's probably going to cost anywhere from $6.5 to $10.5 billion. But that has sent the stock price tumbling from the upper 100s now below 100. I think they're below $90 still for 3M Company. Invested about $4.6 thousand into this big Dividend Aristocrat. Yes, they are a Dividend Aristocrat stock. Well over 25 plus years of growing dividends. So I'm down 32.8%. I am looking at an unrealized loss on this one by about $1.5 thousand. The yield now is 6.79% because of the risk involved with 3M. Now, what could I have learned with 3M? Well, I guess I could have done one of two things, right? Since I'm a buy and hold investor, the earplug lawsuit didn't scare me, didn't bother me. But what I could have done is maybe sold out and rebought back at this price if I was, really slick with it. But that's not really my forte. Is to, I'm not going to sell and hope and wish that the stock price comes down and I can slide in later on. But obviously, knowing that there are legal issues, that's kind of a Pandora's box sometimes. So when you're looking at a company, it could either be an opportunity or a sword, right? Or it could be the double-edged sword, little cliche comment. It could be positive that you might catch an upswing once the lawsuit's done. Or if it's in the early stages, it could be a downtrend just because of the cost and the unknown and questionables that could come from the lawsuit, guys. So that is 3M. Again, still holding, still reinvesting those handsomely large dividends from 3M company. All right, let's get into stock number 4 here, because I know I'm taking up a lot of your valuable time, and I know you guys love to see the bloodbath that I've taken on my portfolio that's currently sitting in my stock portfolio. But again, if you're an investor, hopefully this is helping you on what things to think about, read about before you're investing into a stock or a company. We have to go with Verizon's brother or sister, or whatever you want to call them, AT&T. Ticker symbol is T. This company's been a dog for a long time coming, hence the Warner Brothers Media Discovery spinoff. I don't even know what they're called sometimes these days. But I've invested about 6.36K of my own money into AT&T over my investing time frame. It's worth about $4,500, down $1,900 right there. A 29.89% unrealized loss. Do I call it 30%? Do I round up and call it 30, guys? You tell me. But what went wrong? What can I think about and learn from this? Well, when they bought DirecTV, it was kind of okay, it could make sense. They have the cable, they have AT&T Uverse, they have the internet, the phone plans. DirecTV seems like it could work. That one didn't seem too confusing, but not sure how profitable of a business it was and the synergies that could have been involved. So I'm not sure if they did a full analysis that really showed what it could be, buying them. The big head scratcher was the streaming, right? Being in that arena with Warner Brothers, the Time Warner deal, that one I think is what really put the dagger in on AT&T, hence why they fully spun them off into a separate company. They did sell off DirecTV as well. So really just look at a conglomerate just to see if, does it make sense? Are they profitable? Can they sustain it? The media streaming, as we talked about with Para, high cost business. Not to mention AT&T is also in a high levered business, like I said, with Verizon. So higher interest rates, easy for for customers to switch, competing relatively on price. So again, lead cable issues as well. So, things that I learned from the AT&T one is once they start getting fancy, that's when you should start raising the eyebrow, the rock style essentially. And speaking of telecoms, if you really do want to be in the industry, look at Canada. They have some really good ones with, Toulouse, Bell, you name it. They've got some really strong companies up north of the border here in North America. They kind of keep it sound and steady, similar to the banking industry, if I could say so myself. All right, so we've talked about the worst with Paramount, gone through Verizon, 3M, AT&T. So what made the 5th worst performing stock in my 15 years of investing almost, guys, has actually been in the energy industry. No, we're not talking about Exxon or Shell or Chevron. We're actually talking about Dominion Energy, which is ticker symbol is D, guys. So throwing that up there on the screen, as you can see, I've invested about 3.6K and it's only worth about 2.6K. So I'm down about $1,000, another 28% unrealized loss right now. Guys, I pay my gas bill to Dominion. Dominion takes money from me every single month, and that was part of the reason why I wanted to purchase them, was why not own the utilities that I'm paying monthly for a service here in Ohio. Oh, well, I should have learned from my first energy investment. Ticker symbol there was FE. But really with Dominion, it seems like management had some issues. Obviously, debt is very important to this industry. And that's kind of a resounding theme throughout this entire, portfolio here of the 5 losers. Heavy debt, low margin, and that's kind of what the utility industry is. Low margin, low growth, heavy debt, similar to AT&T, Verizon, and Paramount. So just keep that in mind. And that's really my takeaways with Dominion. So guys, that was my 5 stocks. When you add them all up, guys, I'm down about $9,900, almost 10 grand right now from these 5 investments. I'm still holding them. Again, invested about 26 and a half, and it's worth about 16.6 thousand. So I'm on the cusp of being down about 10 grand, down about 37%. Again, really outside of Paramount, dividend yields on all 4 of the 5 companies are actually the lowest one, 6.4%. So a lot of dividends are rolling in. They'll probably eat away at that unrealized loss because I'm reinvesting back in, buying more shares automatically. So currently I have no plans to sell any of them. I need to see Paramount hopefully get acquired. That's my kind of long-term take there. Dominion just sold off about $14 billion worth of assets to Enbridge, or they're planning to, which is going to close in 2024. So that's going to take debt off the balance sheet. I think about $4+ billion Enbridge, ticker symbol is ENB, they're going to assume, and then Dominion's going to grab about 4 or $9+ billion in cash. Again, 3M settled the lawsuit, and then we'll have to see if Verizon and AT&T can get through this volatility of the economic times that we're in. High interest rates, the consumer, are they going to be paying their monthly cell phone bill? Are they going to become pretty past due? As well as the lead issue there, guys. So I'm holding all 5. We'll have to see back maybe in a few months where these 5 stocks currently end up at, maybe at the end of the year. But let me know what you think of these 5 stocks below. Let me know if you hold any of them. What do you usually do with some terrible performance in your stock portfolio? And let me know which ones are not looking great, which ones are in the red like mine and not in the green like some of the others. If you haven't, subscribe to this channel, guys. Give this video a thumbs up. I appreciate it. That was my 5 worst performing dividend stocks right now in my portfolio, and we'll catch you on the next one.